All right, so day 8. And day 8 is SMT divergences. Let me turn my heat off. Day 8 is SMT divergences, which is going to be a pretty quick, short video because the concept is not super duper hard to understand. Okay. There's already a video out on my YouTube channel that's public about SMT divergences. It's a 30-minute long video. You absolutely can watch the first 10, 18 minutes of it and understand what they are. And the analytics absolutely show people do that. But I want to dive a little deeper, answer questions, make sure you guys kind of understand it because it is important. It is a easy step in one of the steps to the strategy, which I can show you real quick. There is the PIMDOS for the strat. Step 1, step 2, step 3, etc. And if you can see, if one happens, you can wait for an SMT if it happens right in pre-market, which we'll get into partly in this video, and we will absolutely get into when we put everything together a week from today. So pretty cool. Making hella progress. So SMT divergences are pretty simple, and I'm going to show you trying to think how I want to show you. Okay, I'll show you this one. So first step to SMT divergences is you need to have correlating assets. Correlating assets are markets that trade relatively similar. Okay, so right here, I went ahead and added a couple. Okay, it's actually there. So the dollar and the stock market, for that matter, ES and NQ, are inverse correlating, right? So if the dollar goes up, market goes down. You'll see this with news data if you look at what the usual effect is, it will say if if actual is better than forecasted, it's good for currency. So if it's good for currency, the USD, aka the dollar, well, if the dollar goes up, the stock market can go down, right? So they're inverse correlation. And the same is true with gold. If dollar goes up, gold goes down. If gold goes up, dollar goes down. NASDAQ and ES go up, the stock market goes up, the dollar can go down. Okay, those are inverse correlations. Now for SMTs, we're not really going to be focusing on the dollar. What we will be focusing on is the equal correlation, if you will call it that, because they're not inverse. I guess it would be equal. Correlating assets: ES and Q, ES and the Dow, ES and RTY, the Russell or IWM, right? And you could even go as far as saying if SMH, right? QQQ and SMH would probably be another one for equities that I'd put on here. So you could do SMH. I don't have that little fancy thing to QQQ, right? Just like you have SPY to IWM, right? That'd be another one that I would be cool with, these two. But we're going to be really focusing on the equal ones. And for examples, we're really going to be focusing on ES and NQ just because it's what I use every day. And I think it's what you guys need to know. Cool. Now that you understand the pairs, save this, take this note down, do whatever you got to do. Just understand the difference between dollar going up, market going down, gold going down with it, right? Etc. They're correlating, so they'll move together, etc. Understand the difference between inverse correlation and correlating. For an example, I'm going to sit here and show you the daily time frame on the market, since TradingView has been having issues, so it might be a little slow. Okay, I'm going to show you an example real quick that has not played out. Actually, yeah, we'll do this. So look right here. Do you see all-time high on NASDAQ is way up here, right? 26,399, flat, right? We have not broken that high yet, correct? Correct. We have not created a new all-time high on NASDAQ. So if we then go to its correlating asset, in this case, ES, and we look at the equal high to NASDAQ high, which is October 30th, wrong way, October 30th, right? So that same high on ES has been swept. We have taken it out. Okay, so that is an SMT, that is a divergence, an SMT divergence. They're different. Okay. Now that you kind of see the difference between the two, to like one example, or at least got an understanding, I want to show you better examples. So for that, I'm gonna go to the 15-minute. You're gonna get rid of this. Go to NQ, since it's what I look at every single day of the week. We'll use this example. I think, if I remember correctly, there's an SMT in here. Let me play this out for a second. It might have been too soon. Yeah. Select bar. We'll use this. I think that's relevant. Let me shift between the two. Okay, cool. Yeah. So, easy way to mark out SMTs is going to be using a line. Okay. A line or a trend. I like lines for visual representation. What we're going to do is we're going to take this Wednesday, December 31st high at 9 a.m. and we're going to take it to this high. Right? We've broken above it. There's probably a lot here, actually. We take what we said, October, or the 30th at like 9 a.m. So this high right here, technically it's this one, down to here. Whoops. And if you can see, pretty clear as day, one created a higher high while the other failed to create a higher high. Right? You see the difference in direction. There's an SMT divergence. These are directional signs. Okay. I solely would not enter just based on an SMT, but this is how you can start to form a bias. Can you superimpose two charts on TradingView to check? What do you mean by superimpose? Like overlap? Maybe. It's actually a really good question. I wonder if I can put this in. And then maybe like change the colors. Let's do yellow for green, and we'll do purple for that. Yeah. Or we'll do white. Right? Just to show a difference. I'm curious now. This is actually a really good question. I've never thought about this. Just to make sure they're different and stand out. Because it looks like you kind of can. Yeah. Yeah, kind of. It's just rough. I think you'd have to put it on the same scale. But yeah, I mean, you technically can. It's just like, I don't look at, like, how are you reading this? I'm honestly not the biggest fan of that. What I would recommend you doing if you want them on the same is get maybe the two. I don't even know what's on this. And have them side by side. That's an option. Or what I do, whoops, on TradingView, if you have them stacked on your watch list, so NQ, ES, right here, they're on top of each other, just use your arrow button, and you can shift very quickly between the two. So that's an easy way for my eyes to spot differences and be like, oh, SMT here, SMT there, right? That's how I like to do it. You can do it side by side with the multi-charts. You probably could overlap them. I'm just not the biggest fan of that. Looks like ABC has a article on it made by TradingView. They really good content, so probably a way to do it. Not my personal preference though. Anyway, so we have the difference, right? ES is lower, NQ is going up. Okay. Now, typically your target is so if you have point 1 or point A and point B, well, where is the lowest point? Since we're messing with the highs up here, where is the lowest point between those? We're looking for a bearish target right there. That's the lowest point. We go to ES. Let's do the same thing. Where's the lowest point between? It's right here. Okay. So then, if we let it play out real quickly, bam, you smash through and take out the SMT on both, That's a completed SMT. Okay. Now that we have seen an example of a bearish one, and what makes it bearish, guys, if you are using the tops of the candles, aka like this, we're taking the top wick, it's going to be a bearish one. If you're messing with the bottom of the candles, it's going to be a bullish one. So let's go find us a bullish SMT. I probably can just go to today on the 1 minute, and there's going to be an example. Let's see. I know there is actually. Replay. Ah, what did I do? Darn, I messed up. Replay, start new. Where am I at? We'll look into. I'm not on the right time frame. Okay. I'm pretty sure this is one. I'm not double checking it, to be honest. Oh my god, my music's been getting picked up the entire time. That's not good. Copyright. Hopefully I don't take this video down. Alright, so right here, let's see. Yeah, so it's actually right there. Cool deal. Do this. Bam. Right here on ES, we see we created a low at 1027 and a higher low at 1050. We're just going to call it 1049. If we go to NQ, we created a lower low. Okay, see how there's a different correlation? Now, when they're this close and you can't really, like, it looks like a straight line, you can always just put a line there, right? It's also a liquidity sweep, okay? So if we're looking here, we're targeting, it's on the bottom of the candle, so it's a bullish upwards indication. Where's the highest point between point A and point B? Right there. We go to ES, right here. Where's the highest point? Bink. Where's your target? That's one of your targets. So then if we play it out, we complete the SMT. Right? This works on all time frames. So real quickly, before we go any further, let's go into notes. I wonder if I can, like, this is a lot of space. Okay. Looking for ES and NQ to create different lows or lows/highs. Okay. Just trying to think how to explain this in words. Then I'd put like example, ES creates higher low while NQ creates lower lows equals bullish indication. Okay. And a bearish example would be ES creates higher highs while NQ creates lower highs. Bearish indication. Okay. I think I spelled indication right. But notice how bearish we talk about the highs, bullish we talk about the lows. Okay. That's really the key takeaway so far. Okay, if you're messing with the bottom, you're looking up. If you're messing with the top, you're looking down. Right. Oh, and then one more note. If the lowest / highest point between the two SMT points, that's what we'll call it, is the target. Okay. Hopefully that makes some sense. So if the highs are not aligned, it will go down to lows. If the lows are not aligned, it will go high. Yeah, pretty much, right? Exactly right. And this is also true with like liquidity sweeps, right? So if you go to a high time frame, liquidity is really, really good and basically also the start to an SMT, right? So look right here. I'm pretty sure this is an SMT. So 730 candle on NASDAQ got swept. ES 730 candle did not get swept. Okay, so what is this? This is a bullish SMT. Market them out, right? Or do it visually or in your head, whatever you want to do. And then where's the highest point? Since we're messing with the lows, we're looking high. Where's the highest point? The highest point between them is here. And on ES was here. So ES has completed its SMT. Now, with that said, look at this. It's 915 candle. We've created higher highs. 915. Where's the 915 candle? 915 candle. We have not created a higher high. So there's a bearish SMT back down to these lows, right? So you can get SMTs on SMTs on SMTs, and typically it just signifies chop. But ES did complete its bullish one, so that would make me a little wary of, okay, hey, this SMT is no longer relevant. Right, we've checked it off. Yeah, multiple SMTs. They're all over the place. And that's where SMTs are just going to be best paired with other things, right? They're indication. So forming bias. Like if I come into the day looking at the hour scale or hour time frame and I see a bearish SMT on the 1 hour, then I'm probably going to go, ooh, we might be a little bearish today, right? Like look at this one. I'm would not be surprised if there's an SMT somewhere right here. Let's see. Oh, I went the wrong way. Oh no, was this CPI? I think this was CPI that I'm messing with right now. Oh, hello. Okay, yeah, trading view's been acting up. Technically a little SMT if you use, or I guess it hadn't happened yet, did it? There was like a small time frame SMT yesterday to signify downside in the morning, which is a confluence we use to enter, paired with other ones. But yeah, so SMTs, right? Target between like this, great example, bam, 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 target. Now, let me show you another thing real quick. Replay, start new. Makes my life so much easier. So we can see that the move played out. You guys can understand this. If you want to take a screenshot of this, by all means, and then you can put it next to this one, which I'll redraw out for you. And you can have a visual note if you want of what it is. Okay. Now, I want to explain another concept, kind of important. And now, I do void this sometimes, right? Just because my preference is NASDAQ, always has been, probably always will be. But technically, when you have an SMT in this situation, right? We're looking bearish here. So which one is the lagging indicator? Okay. If ES is down here and NQ is up here, right, but we're having a bearish indication, which one do you think you're meant to short? Does anybody in the call want to take a guess? You're so lucky I have a hot mic and can't say certain things. NQ, can you show again? Yeah, I'll show again. So right here, we have, NQ is creating higher highs. ES is creating lower highs. Right, we have indication of it being short. Which one, and it doesn't matter that you know the move played out, which one should you short, technically? Any guess, gamer? That's an answer I'll accept. I will accept either one. Technically, you're meant to short the higher one. The one that's more extended to your target, which is NQ. Yeah. Right. But if we were looking at a bullish one, let's say this is NQ and this is ES, right? Just to give you an example, because I don't feel like finding one. There's your SMT, hypothetically in this example. Did I say this was NQ and this was ES, I think? You're longing NQ again, or ES, whichever one, right? Because it's the furthest down, right? That's the easy way to think about it. It's the lagging one behind, right? Because if we're looking bullish, which one's lagging bullish? This one, right? You might be like, well, ES is stronger. Look, I don't know. Okay, I don't know why it is. It's just the way I learned it. It's the way I use it. It makes sense. Now, same thing is true. Let's say this is ES and this is NQ. Yeah, you're meant to long ES, right? And that's where I say sometimes I break that rule, and we'll go do it. And sometimes it does bite me in the ass. I'm gonna tell you straight, like truth. It does bite me in the ass once or twice, and I'll show you a prime example of this literally yesterday. We go to NQ. We'll go to yesterday morning. I think it was yesterday morning. Wednesday morning. And we'll turn replay on to make my life once again easier. Okay. So look right here. Where is it? SMT at? I want to say it was this high. 8:30. 8:30. No, what about this one? There was an SMT, or it was Tuesday. It might have been Tuesday. I think it was, because Tuesday was chop. Yesterday was a decent day. Yeah, it was Tuesday. Bear with me if you want this example of how it can mess you up. So we had reason to look short, and we were already like biased to the downside. And we had on NASDAQ chop, right? There's the SMT. But it look-y just completely invalidates my idea. What I'm trying to show you, but I'll show you anyway. So there's your SMT. This high to this high. There's your target down there. Here's your SMT here. Right? And then you would find an entry based on other stuff paired with that. In this example, though, we just chop sideways. But I'm pretty sure NQ ends up like smoking it and downside. Yeah. Because we end up taking all that out. And where's your target? Right there. So, and look, there's not really an SMT either. But yeah, you kind of get the point. But once again, it's best paired with other stuff. So let's put that in our notes. We'll put used for creating biased. Best paired with. Is there no R in that? I can't even see. Oh, my graphics are so bad. Best paired with other confluences. And then I would say, yeah, do not short/long just based off the SMT. Okay. That's like truly super important. Don't just trade based on it. You want to pair it with other stuff. So that's like legit it. Voila. It's really not rocket science. And that's the great thing about these is they're super easy to understand. They're once again not rocket science. They're all over the place, all time frames, important, clearly work. Like watch, I'm just gonna go randomly. We'll go. You know what I'll do? Watch this. Let's see. Start new. We're on the 1 hour. We're just gonna go right here. Select. We're gonna find an SMT because I'm sure there's one somewhere in here. Shift between the two. Oh, I went to R. Boom, 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 boom. There's your SMT. You're looking at this Wednesday low on ES. Oh, messed it up. Here, where's that Wednesday low? It was like December 3rd. Did we break through it on ES? Is this not an SMT? Ooh, I honestly can't tell. I gotta zoom all the way in. It's not an SMT. Or no, wait. Hold on. Because even if we swept it by a single point or a single tick, that's crazy. Those are equal lows. Okay, so yeah, that's an SMT. So we have equal lows on ES, and we have lower lows on NQ. Look between the 2 points. Where's your highest point? It would be like here on NQ and here on ES. I honestly have no idea if this will even hit, and this could be a really bad example. Which one's lagging? NQ. And it never actually hits it. That's crazy. Did ES on pause? Yeah, ES swept it. That's crazy. Right. Maybe disregard everything I said about which one we should technically trade, either one. All right, that's kind of why, gamer, I think you had the right answer. I think it doesn't really matter. It's used for just direction. It's like IV, right? IV shows that you're gonna have like an impulse move, right? This is why it goes up, around, whatever, except you don't know the direction with IV. This, you do know the direction, well, if it works, right? And it's not just like that chance it's not right. It doesn't work, but you know direction, use it as a confluence to form a bias, right? But yeah, ES takes out its target, NQ does not. What does that create? Isn't this interesting? That creates us a bearish SMT. Right here to right here. And we go to ES. Oh, that's MNQ. Go to ES, delete this, and we have this. Where's the lowest point between the two? Exactly where ES held, the equal bottom low, which is also liquidity, so that's a really good target. We come down, smash through our target on ES, and smash through the target on NQ. And then watch this. Is there an SMT down here? No, I'm going through NQ and NQ. There is. And see how shifting between the two just makes it kind of, in my opinion, makes it easier for my eyes. We have a higher low on ES, and we have a lower low on NQ. Where would be the target? Highest point between the two. Bam, NQ smashes it, completes its SMT. Highest point between them is right there. Bam, ES smashes it. If this is an SMT, I'm going to laugh. That is not an SMT. Actually, high, no, not. Well, kind of. This is an SMT. Right here to right here. Target be down here at these lows. Never swept. Right, so there are SMTs all over the place, long story short. Used for direction. Used to give you an extra target. Yeah, used for bias. Best paired with other things. Okay. That's really it. This works on all time frames. So like if you are trading on the 1 minute and we come in here, let's see if I can find it in SMT real time. Oh, in it in Q. Bam, 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 bam. There's one. I think. It's rarely close if it's not. In Q swept. Okay, that's not an SMT. Is that an SMT? I think it is. 1205. 1205. Okay, yeah, there's one. And they can be really small too. The bigger, the better, but they exist on small ones too. Right, and this is where like you definitely need to have other confluences. So look at this 1205 high, 1209 high, NQ made a higher high. 1205, 1209. Look on ES, 1205 to 1209. Lower high. Bearish SMT. Right. And there's probably a bigger one somewhere that I'm just like neglecting on a 5 minute. Which there's literally like we're in a bearish SMT right now in the monthly time frame. So just, you know, food for thought. Yeah, look, there's that one. Previous day high, literally anywhere. ES has created a new day high all day. NQ has not. Where would the target be? That'd be low of day. So potentially we are targeting 803, which then would align with the other idea I have, but that's besides the point. So pretty cool. Once again, can't reiterate this enough. Best paired with other stuff. What questions do you guys have? Yeah, there's divergences in all different things. RSI divergences, MACD divergences, squeeze Momo divergences. There's a lot out there that leads to indication of something to happen. I don't use indicators, really. I use like the daily SMAs. so it's hard for me to say like, oh, RSI, divergence, and whatnot. But yeah, they do exist. It's Fibonacci's, right? People use Fibonacci levels. I don't. Doesn't mean they're not true. So yeah, absolutely, you can look at RSI divergences. I don't use them, so I'm not really just gonna like teach them just because I don't use them. I do know trying to make it. He uses them. I'm pretty sure. So if you're fascinated with that, definitely talk with him. He'll put you on. Damn, look at that. Look at this ES long. Liquidity sweep, impulse move, fair value gap, SMT down into the fair value gap. Look at that. If we go to the low time frame, oh yeah, that's nice. That's nice. Target here and here. Alrighty. Well, if you guys don't have any questions, I mean, I'm gonna call it here. Go ahead and end the recording. So recap the notes real quick since it's the last day of the week. What was the start of this week? I already forgot. Break a structure. Yeah. So breaks a structure we went over. There's your notes. Absolutely should have them. Liquidity we went over. The building blocks, super important. And then SMT divergences today. Here are some correlating things. Again, dollar is inverse to ES or just the stock market and to gold. But that doesn't mean gold is correlating with NASDAQ or the stock market. Okay. That does not mean that. ES correlates to NASDAQ as we just went over. ES goes to the Dow Jones and the Russell, IWM. You can also use SPY to IWM and Q to SMH, right? They're correlating to some degree as well, right? Because they're inside of each other, pretty much. Overall notes, look for ES and NQ to create different highs or lows. There are your examples if you want them. The lowest / highest point between the two SMT points, the start point A and point B, is your target. Once it hits the target, the SMT has been completed. You don't want to use this solely based to enter trades, guys. You want to use this to form a bias to go, oh, okay, there's an SMT. We might be looking for some downside here. Let me, look short on the day, look short on the week, look short over the next hour or so, right? They're best paired with other confluences. So if you see an SMT, I'm still waiting for a liquidity sweep, impulse move, etc. Right? I'm not just going to do it by itself. Which then there you go, right? Do not trade just based on an SMT. Pretty easy notes, pretty easy concept. So yeah, and then tomorrow, aka Monday, we go over supply and demand. God, we are really close to finishing this up. So a week from today, we'll be putting it all together, and that's going to be a very, very long video. Highly recommend everybody tries to make it. So, yeah, cool deal. Appreciate you guys.